The major impact of capping or altogether eliminating the 1031 exchange is that the program incentivizes investors to invest more in commercial real estate. You're going to 1031 exchange out of one property and into another. It's been a tool for decades that helps both sophisticated investors and newer investors build their wealth by rolling it into the next property. A rollback of the 1031 exchange is likely to cause capital to race out of the system. It almost eliminates commercial real estate as a viable investment vehicle, and it would certainly reduce the number of transactions that occur every year. Local jurisdictions would lose the revenue from the taxes that investors pay on their rental income. This could have an impact on an already struggling commercial real estate sector because it will be a disincentive for investors to purchase bigger buildings. Now, let's give an example of how that could look. Let's say that you purchased a property years ago for $200,000 and you decide to sell it for $500,000. You would then be taxed on that $300,000 gain in property value. Under the current rules, when utilizing a Section 1031, if you purchased that same property for $200,000 and sold it for $500,000, that $300,000 that you made would be deferred into the next property, meaning the taxes due are not necessarily forgiven, but they are certainly postponed until the sale of the new property, in which case you could 1031 exchange again. If 1031 exchanges are eliminated for certain taxpayers, you will start paying capital gains tax at the time of sale and have less money in your pocket to reinvest into the replacement property. Now, let's give an example of that. Without the 1031 exchange option, let's say you buy a property for $5 million and sell it for $15 million. You no longer have $15 million to reinvest. Instead, you'll be paying nearly 40% in federal taxes, plus other taxes that could add up to about 50% of the gains from the sale. That would leave you with only about $10 million to reinvest. Here's another example of how this could play out. Let's say that you have a $2 million commercial real estate investment and you want to sell it after 7 years when it is then valued at $5 million. You would realize a $3 million capital gain. That entire capital gain could be invested into your next property using a 1031 exchange, but without the 1031 exchange option, you will likely pay the current 15% federal capital gains tax, a state income tax, which, for example, in California would be 13%, plus the passive investment tax of 3.8% for a total of 31.8% or $954,000. If the 1031 exchange is capped at a $500,000 profit, you would then be paying taxes on $2.5 million of the profit or $795,000 at the above tax rate. Also, the taxes could be significantly higher if the capital gains tax rate is increased. Eliminating this provision would likely lead to a downward adjustment in property prices, and investors may hold on to properties for longer as a result. Think about it. If you are now having to pay 40% taxes and you're no longer able to take advantage of a 1031 exchange, why would you sell your property? It's going to make you more money just to hold on to that property and let it cash flow than it would be to just sell it and reinvest into a new property. Residential real estate markets will also be impacted. Slightly more than half of the properties involved in 1031 exchanges are residential properties, including single-family rental homes, apartment buildings, and condominium units. Now, there's likely to be a rush to sell properties followed by a drop in sales, which we have seen left and right this year. Most commercial real estate brokerages that I have spoken with are having record years because most of their clients are trying to sell their properties in 1031 exchange now so that they don't have to deal with the potential 1031 rollback or capital gains taxes later. If Congress moves to severely limit 1031 exchanges, experts say there is likely to be an initial rush to sell properties held in 1031 before the change takes effect, just like we're seeing now. That will probably be followed by a drop in the number of property sales transactions and less liquidity in the market. So if you're a commercial real estate broker or maybe even a residential real estate broker, expect to see far fewer investment transactions if this should take place.